All right. It is going live.
Let's go.
Perfect.
The following program was pre-recorded for broadcast at this time.
4 different
The following
Columbia
program is sponsored by
shirts.
Mr. Texas
did you?
Real
See
Estate.
which one will fit best for our
Perfect. I love these shirts.
I'm going to try and get the Spotify sounds up this week.
Welcome to the Texas Real Estate Radio Network with Mr. Texas Real Estate Jason Bible and Mr. California investor Robert Orfino. Join us as Jason and Robert talk about the hottest real estate market in the country, the entire state of Texas. Learn why Texas is such a great market to invest in and why it could be strong for years to come. Get ready to talk all things Texas on your new home on the way to the office. Texas Real Estate Radio.
Welcome to the show. We're going to talk a little about lending and defaults right now. I actually posted that, put an email out yesterday. We were chatting with a private lender last week. 4 out of their 30 loans are performing, meaning 26 are non-performing. And when I posted that on Facebook, I haven't read all the email responses yet, but when I posted on Facebook, the fascinating thing is how many people said, oh, those guys don't know what they're doing. Like, there's no way. That's impossible. And I'm like, you really don't know what you're talking about. Yeah. Like, these guys don't know what they're doing. I thought that was hilarious.
That
but
was
anyway,
good,
yeah, they don't know what he's just doing it to, increase the drama. I'm like, no, I just do that with the Trump memes. I don't really do that with the real estate stuff. But anyway, so a couple of people are non-believers out there. So we're going to talk about defaulted loans and the marketplace. And I'm going to start the show off with this. If you've got a deal you've done, you've lent someone some money, and they're not able to pay you back, give us a call. We'd like to take a look at that deal. Maybe we buy the note. We help you through the foreclosure process. Just reach out to us so we can help you. But I think people are greatly discounting how much real estate investors are hurting right now.
Sure.
Now, this sounds weird because I come on the show every day and say, buy, buy, buy. It's a great time. It's a great time. It's a great time. It's a great time provided you can get properties rehab and get tenants in them, or you get properties rehab and you get them sold. And I think there were a handful of investors out there that weren't doing great before COVID. And in a COVID world, it's kind of turned into a mess.
Right. And full disclosure from me, I suffered at the end of Harvey.
Yes.
Right. I took some big hits, and we're still got some things that are being paid back, and structured it all and talked to the partners, and some partners just ran to the hills. Left me holding the bag. But I've made efforts, got another flip coming up, right? So I understand exactly how it happens.
Mm-hmm.
I know from experience how it happens. And part of the problem is that we're having now is the takeout financing.
Yes.
Right? Which wasn't the problem in Harvey. The problem in Harvey is everything lost 50% value.
Yeah, at least in the short term.
Right. And I'm just now selling 2 houses that I had from Harvey.
Yeah, and those are typically the higher end homes.
Yes.
It wasn't the lower end stuff. That all was just fine. In fact, there's a tale of 2 Harvey properties. I've got my property in West Houston. You've got a couple that are flips. The one in West Houston is almost doubled in value, whereas the ones that you've got
taking a hit
are still taking a loss, right? So it's when people say, oh, Jason, well, this is what happens in a marketplace. I'm like, no, that's not true, because you've got different price points, you have different sides of town, all that sort of stuff.
So I do want to disclose that because I don't want you to feel like, hey, we're just picking out people.
Right.
It's as close to home as anything else.
I took a $250,000 loss on a house in Harvey. $250,000, 250 G's. So
we go through the same problems that everyone else is. We're not perfect. But what we're seeing out there is the takeout financing problem.
Yes.
So a lot of the guys, including us, have done a lot of properties with hard money or private lenders. And then the expectation is to roll them into 5, 10, 20, 30-year mortgages.
Mm-hmm.
And when that all went away during the initial parts of COVID, right? We joke around. There's the non-QM guys. We're here for you. We've been here for you, except where we didn't pick up the phone for 6 weeks, right?
Yeah.
Except that point. So we're seeing that on the street in a big, big way.
You know what I'm thinking we need to do? We need to change a little bit of terminology here. Let's change non-QM to commercial lending.
Yes.
I think that's probably we were having some conversation with some bankers. I thought it was interesting. They were like, so what's non-QM? I'm like, well, you guys are non-QM, right? So I was thinking about that this past weekend. I'm like, we all just call it commercial lending. Like when you guys go out and get a single family house, when you buy a single family house in your name, you're getting a Fannie or Freddie loan. That's not a commercial loan. It's a government-backed, government-subsidized. A good way to put it is a government-subsidized. I know we got all these guys on Facebook that are like, want to be libertarians and gung-ho conservatives, but they all suck that government tea when it comes to loans. So that's why your interest rate is 3%. That's not a naturally occurring rate. It's probably a better way to put it. It's government-backed. That's why it's so cheap. It's government cheese for housing. And that's what the vast majority of mortgages out there are, government cheese mortgages, which is fine. Everybody just realize that. That's what it is. I know everybody wants to be anti-quote the man. Guess what? You like your cheese. So that's what your 3% Fannie Mae loan is. So when we start talking about commercial loans, that's a whole different deal. So we had all these commercial loan brokers that have been sending us emails for the last couple of months telling us how they're still here and they're for us. And you guys, we're always been here. And we're like, no, you weren't. Because the first 4 months of COVID, y'all didn't even pick up the phone.
Right. Just crickets.
Total
crickets.
Which they could have been doing. This is what's so stupid about that. They could have been gobbling up market share just like we did, just doing webinars once a week. Hey, guys, we're going to have the CEO of XYZ Lending on the call today. I know we're not lending right now. It's kind of crazy. Let's get them on the call. And talk. All right,
just like what we're doing right now.
Like exactly what we're doing right now. I would get, if I owned one of those companies, like, all right, here comes the CEO. And then, you know what, next week we're going to have the risk management team, the head risk officer, and he's going to explain to you what's going on in the secondary market. And this is why we can't. They could have gobbled up so much market share because everybody would have been watching going, oh, now it all makes sense. And they would have been sending this is what I would have said too. Hey, guys, go ahead and send us your deals. We're going to put them in process. Now, we're not closing anything, but at least let's kind of start looking at these things. And then they would have picked the cream of the crop. Literally the day when the market would have opened and boom, they would have just gobbled them up. But anyways.
But the problem was they were terrified.
Of course they're terrified.
They were terrified that it was never coming back. We talked to 2 lenders who really specifically said to us, I didn't think I was going to have a job here today. Yes. I thought the whole business was going under.
Right. But you know what?
It didn't.
It didn't. But here's more importantly. Okay, let's say it did. It's 18 months. Right. Like, you just play it out. That's the part I don't get about all these losses. Like, everybody thinks it's roses and it's great and everything's fantastic all the time. Like, there's going to be bumps in the road. All you got to do is just get over the bumps. And if you're the guy that gets over or gal that gets over the bumps the best, you're going to win big long term. So that's why I didn't understand. I still don't get that short-term mindset. Yes, you don't know. The business might not be here tomorrow, but it might survive.
Right.
So this plays perfectly into what we're going to talk about next. How many folks during 2008 or Harvey or what's going on in Lake Charles and Louisiana right now? It's a bloodbath there from the hurricane. And they're looking at another storm rolling in, next couple of days by the end of the week. So I was thinking about this. I had a really rough bike ride yesterday. It was brutal. Like I thought the cold front was a real cold front. It's not. 95 is still too hot to be out there in the middle of the day. So, but there's a classic kind of saying in the cycling world, and a lot of people don't understand this. The difference between people who are serious cyclists and those who aren't are the ones that pedal downhill. Like you're pedaling downhill. Like, what do you mean I get to pedal downhill? I get to coast. No, that's not how this works.
Right, keep going.
You pedal downhill because you know you're going to reach another hill. And if you've got all that momentum going down the hill, coming up the next hill is not as hard. You're just rolling that speed from the next. So if all these guys were pedaling downhill, and then when the next uphill comes, it's not as bad.
Hey, this is Robert and Jason with Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. We'll be back. See all those YouTube followers? Very good.
I like it. On the tubes.
Caffeine spike.
Uh-oh.
You ready?
Yeah. That was a Diet Coke I opened, not an adult
Nice
beverage.
and crisp, yeah.
Yeah, it's party time here in the studio. I gotta tell you, I was enjoying the pool at the new crib yesterday, and they are not. When all the pool guys told me, "This is the biggest pool I've ever owned, and it's real deep," and I did not understand how cool that thing can get, like as in temperature wise.
Yeah.
Because half of it's shaded and the deep end's shaded, and they're like, "That's where all your cold water comes from." I got in yesterday. I was like, "Whoa,
Yeah.
you're gonna need a heater during the summer."
Mine was still cold too.
So, in any case, we're talking about loans, and maybe a better way to say this is deals gone bad.
Right.
So let's talk. We were chatting with a private lender this week, and he said, "Hey, I got 4 out of 30 loans, and only 4 are performing, and those are the 4 you guys have."
Right.
So Rob and I had this conversation. We never missed a payment during all the coronavirus stuff. Not one. And we know, and he's not the only one we've talked to that has said that he's had borrowers that are just not paying.
Mm-hmm.
So I think that's one thing you guys on Facebook that keep writing stuff on there like, "Jason, that can't be true." I'm like, we know more than a couple private lenders. And a lot of them are saying 40, 50, 60% of their portfolio is not performing, meaning they're not paying.
Right.
And then all these people come in and say, "Well, Jason, then maybe they weren't that good investor in the first place." And I'm like, well, if that were the case, they'd have a fund and bank lines of credit and everything else. So you've got to realize that one of the reasons that some people go to private lenders is because hard money lenders turned them down.
Sure.
Can you imagine giving a loan to somebody that Eddie and Johnny turned down? I mean, because don't get me wrong, they don't do risky stuff.
Right.
But if it looks like a good deal, they'll work with you to get the deal done, right? So actually, you know what? We ought to have the guys on the show and say, what's the most common reason a deal doesn't close?
Mm-hmm.
My guess is 1 is reserves, and 2 is appraisals, and 3 is they don't think the guy can get the deal done.
Yeah.
In other words, they don't think they can manage the rehab, that sort of thing. So when they get rejected by a hard money lender, then somebody goes out and finds a private lender who is definitely not as experienced as the guys over at Jet Lending, right? They do thousands of deals. They look at thousands of deals a year. So, and in fact, they look at the same deal from different investors multiple times, right? Yep. As an asset gets shopped around the marketplace. So the reality is private lenders end up doing those more risky deals. Well, what happens? Well, when there's a little bit of trouble in the marketplace,
right,
those deals start falling apart.
Again, so the trouble that we have seen is the takeout financing. Meaning, yes, hey, we bought these 10 houses with the intention of rolling them over into long term. And then the commercial mortgage world shut down,
yes,
for COVID. And when it came back, it looked nothing like it did before.
No.
It wasn't like your favorite nail salon closing and opening up and there you go. Because, you definitely have a favorite nail salon, Jason. Anyway, it didn't come back the way it was. And now all of a sudden it was loan to cost versus loan to value. So
we went from loan to value, whereas if I were 70% of ARV, I could be into the deal with little money out of pocket.
Yep.
Well, now the commercial lending environment says it's loan to cost.
Right.
Meaning we will lend you 70% of your all-in costs.
So it's up to 80. Some places 85, but it's going to be 85% of the cost up to 70% of value.
So you got 15% skin in the game at least.
At least. And then that's going to slow down their ability to refi out their properties. Because now they have to go raise an extra $25,000, $30,000, $40,000, $50,000.
Yeah.
Which, that hurts.
Yeah.
Right? We have a fund, we have a reserve, we're okay there. So that's why we've been able to sort of weather this storm. But we're watching these commercial lenders come back to the marketplace, and it's all over the place.
Yes.
It's as low as, we found it as low as 5.5%, as high as 7.5%. The points are up and down. The fees are all different now. And the big thing is loan to cost and prepayment.
Yes.
So now they're doing loan to cost, which means you bring more money to the table, and they want 3, 6, 9, 12 months of payments up front.
And reserves.
And reserves.
And cash reserves on top of that.
Reserves, yeah.
So you could be looking at 15% down plus 12 months of reserves plus 12 months of prepaid reserves.
Yes.
So when you start looking at, a little $100,000 property, you're bringing $15,000 to closing plus the prepayment, which is probably another $12,000.
10 to 12.
Plus having another 10 to $12,000 sitting in a checking account somewhere as reserves. It's $25,000 to close a $100,000 deal.
And so here's what we see in our mastermind and elsewhere. It's like, hey, I found this guy who's going to do 4.5%. I'm like, great. Let me know when it closes.
Yes.
Right? Because there are tons of commercial guys out there telling you how great their programs are and how low it is. But when we get to the table, it's like, wait a minute. I thought you said 70. Why are you only funding 62?
Mm-hmm.
Well, we looked at the appraisal. The appraisal came back at 165.
Yeah.
What's the problem? And the issue is remember, we'll take a step back in a second here. The issue is someone doesn't feel comfortable.
Mm-hmm.
If someone's money is like, no, I'm not going to do that. And again, here's the thing. We did this in money coaching. Loan officers lie. They are not the underwriter. They are not the processors. Loan officers is a fancy word for salesperson.
Yes.
And if you believe the sales guy, you're always doomed, right?
So I know used car sales guys don't have the best reputation.
No.
Loan officers are selling you used money.
Yes.
They will absolutely lie to you, bold-faced, right to your face. We had 19 of them lie to us on 2 apartment complexes in Corpus Christi. It got so bad, it obliterated my credit for a good, we're still kind of getting out of it. So about 12 months, I had 19 inquiries from loan officers that just lied and lied and lied. It was crazy.
So much so that you can't even apply for loans at this point.
I can. They're just not cheap.
They're
That's
not
the
cheap.
problem,
So
right?
we're using mine, and I'm stacking up the inquiries now. So I mean, these are the problems that we're having, and I'm guessing we're not alone.
No.
And the problem is, once you start getting hits on your credit, all of a sudden there's a gap in the armor now that they can pierce.
Right.
And say, well, Jason, you looked at your credit, it's not that strong as it used to be. We might have to do 60% loan to value here.
And a higher rate.
And a higher rate, and more points, and all that stuff. And then all of a sudden, those little chinks in the armor open up, and you can't refi.
Mm-hmm.
Right? So, again, we've experienced this to some degree, but we can understand how folks out there who are playing this. Here's the big one that makes me really nervous. I would go get a mortgage. And then I would take that house and I would lease option it back to other ones. There's a couple of guys who are doing that with private money. That makes me terrified.
Yeah.
That's not as strong. I have a house, and if I can't get a refi on it, I can sell it. I still have 30% in it.
Correct.
So these are the things that we're facing, we're seeing in the market. We're hearing there's lots of great rates, but I'm not hearing from anyone who closed. When we come back, we're going to talk about the whole appraisal fiasco that's going on right now in the marketplace.
That is only going to get worse.
It is not getting any better anytime soon. So Robert and Jason here from Mr. Texas Real Estate. Check us out on our website, mrtxre.com. MR for Mr., TX for Texas, RE for Real Estate, mrtxre.com.
Ready?
Yep.
Good.
So before we hit the appraisal thing, I think what everyone needs to understand, there's a very sort of amateur view on this.
Okay.
Maybe like a layman, right? Not quite understanding it. And if you're in a bad deal, do not do what I did. If you're in a bad deal and it looks like, hey, I'm not going to get out of this, or going to take substantial resources and capital, it's okay to go back to your lender and say, I can't do this.
Yeah.
It's not working. That would be much, much preferred. We talked about it the other day. We had a friend of ours who was 10 houses deep into bad deals.
Yes.
Really bad deals. And he called up a mentor of mine and his, and the mentor said, you need to go and file BK right now.
Mm-hmm.
Right now. And that was like 6 years ago.
Yep.
Right now, file BK. It's business. These are LLCs. Everyone understands this is business. It's investing. Everyone should understand that we all have our big boy pants on. And file BK and protect yourself. He didn't.
Mm-hmm.
Tried to force some way out of it. Got into worse and worse deals.
Mm-hmm.
More and more bad deals. Made bad deals. Burnt tons of bridges. And still has debt 6 years later.
Yeah.
Lawsuits, liens, judgments, just a mess.
Yeah.
He should have went BK.
Yep.
When I look back at it, the day after Harvey, I should have filed BK protection.
Mm-hmm.
I didn't.
Yeah.
I stayed in there and tried to work it out, and what I've wound up doing now is putting $100,000 of my money in,
Mm-hmm.
just to make it better for other folks. And I'm still not quite out of it. We're close, but not out of it.
Yeah.
If you are suffering from COVID and going through it, it might be an option.
Yes.
Again, we're in a real world here. And if you think you're dragging on and on, if it's been 90 days and you haven't even sniffed a refi,
Mm-hmm.
you might want to have that conversation with, I don't know what to do. How do I get out of this? Versus, don't worry, I'm almost there. I'm almost there. Real estate investors, that 1 to 5 year real estate investor always has this sort of unlimited hope that things are going to turn around.
This is that term you introduced me to last week, toxic positivity.
Toxic positivity.
Yeah.
That they're going to be able to spin it around. I could do another flip. And again, I'm speaking from 100% experience. If it's going to be more than 6 months, you need to sit down and have a really hard self-think and self-conversation that what will this do? Well,
and the conversation with the lender is, this is how I would approach the conversation.
Mm-hmm.
We're trying to protect as much principal as you have.
Yes.
Like, there's no way you're getting interest. The market's collapsed.
Right.
There's nothing else we can do. We're pushing up against that. Now, again, to go back and say, when Tesla fell 25% last week,
right?
I'm sure you didn't throw a fit, call Tesla, and pull all your money out.
Pull your money out, yeah.
And
go on Facebook.
And
trash Elon. This guy screwed me.
This guy screwed me. No, that's not how that works. So this is no different in that. All right, so we've got a problem here, and here's the problem. I'm just trying to protect your principal at this point. Now, what does that look like? Does that look like, do we hold on to this thing for a little bit longer as the market recovers? Is it the classic one you always hear is, contractors disappeared, in the middle of coronavirus nonsense, and I had to find another guy. I need another 10 grand just to get this thing over the goal line. So maybe you'll lose 10 grand instead of 30, right? Because it's not completely rehabbed.
Right.
So there's some of these strategies where you got to sit down and say, okay, look, we locked in losses the day either you bought it or the day this coronavirus stuff started, right? Like, the losses started there.
Yes.
So let's back into, how do we save as much money as we can and get out of this deal? In some of those cases, it's contacting somebody like you and I, so we can go look at it and go, all right, guys, here's the plan. Like, here are the couple of ways we can do this.
Sure.
We can buy the note. We can help you guys do the rehab, whatever it is, and get you out of that deal. Because we've done this a million times. Because the joke we had years ago was we were the private lender bailout team for Houston. We would get phone calls all the time, typically out-of-state borrowers and lenders. Hey, Jason, I met you in Florida at some event. My friend Bob, he and I are in the same real estate club here in Minneapolis, and we bought a flip in Westbury in Houston. And it's been a year and a half, and he hasn't paid me any interest. And, what do I do next? I'm like, well, give me the address. What's the key box code? Let me go look at it. And, you start looking at it and go, oh, this guy may have just embezzled the construction funds. I mean, you don't know, right? Until you go out there. So the reality is, it's like you got to start handling these things. Now, let's back into, all right, how do we mitigate future damage, and how do we reduce the losses you're already experiencing? But I've seen a lot of these private lenders that if they don't set the deal up right from the get-go, and I will say this, I honestly believe that I know this to be true, there are a handful of private lenders out there that absolutely take advantage of new investors.
Sure.
They have no idea what they're doing.
Mm-hmm.
They get into a deal just so the lender can take it back. I know there are lenders in Southern California that do this as a matter of practice.
Yep.
So, and I know there are folks that do it here in Houston. So when you hear some of these stories, take some of it with a grain of salt, where you go, well, tell me more about the deal. Did the lender take advantage of a borrower? That happens. Remember, these are commercial loans. These aren't like residential consumer loans where you have all these consumer protections. When you jump into that hard money, private money, commercial loan space, one of the jokes is for all the apartments and buildings out here that day one, you're in default of some covenant somewhere in that loan. I kid you not. That's a total thing in the industry.
Classic Steve Newsom note, right?
Yeah, it's like they will. All the attorneys will tell you this. Day one, you close that commercial loan, you are probably in violation of one of the covenants.
Right.
It's just they can literally foreclose at any time. So you've got to keep this in mind when you're hearing these stories about, well, some guy got 3 houses foreclosed on. I'm like, okay, well, explain those deals. Yeah. What they look like, what the loan docs look like.
But again, so we're at 6 months now outside of COVID, from that March 12th for you, March 15th when I came back from Florida, that the world shook. We're seeing light at the tunnel, right? So there are commercial loans out there for 5, 7, 10 years. There are commercial loans out there for Airbnb products. The local banks now are drooling over our small apartments. We're meeting with, I think, 3 more this week.
Yeah.
And so those are all the stuff that we have. We're going to be able to take care of. That's fine, because we had a super huge reserve fund.
Yes.
Right. That's kind of how we got through it. Luck and operating agreement notes that, hey, we're never going to go below this number. Yeah. There's always going to be reserve. We got to carry 1 year on our books. That type of thing, which put us in a strong position, which, it comes from 10 years, 15 years of experience here,
mm-hmm.
right? We did do that on other stuff, at least I haven't in the past, right? And so you learn from your mistakes and move forward. But you're coming out of it now where you're going to be able to do refi it,
mm-hmm.
right? If it's, again, short-term rentals, you're going to be able to find that loan now. You're going to find portfolio loans between 4 and 5%.
Yeah.
And you're going to find straight up local bank loans. All of it now is a ton of paperwork and takes forever to get an appraisal done.
Yes. We haven't even started talking about appraisal.
No,
yet.
We'll say that for the next show, because we got one more segment we can wrap this stuff up here with. But there is an avenue here, and you've got to take the look to say, wow, the lending requirements went up. I'm not as strong financially as I was a year ago when I first bought this project. And so it might be time. Here's the other exit. We'll come back and talk to this in depth. Put it on the market.
Yes.
This is Robert and Jason. This is Mr. Texas Real Estate, Texas Real Estate Radio Network. We'll be back. One more, right?
Sure.
Just going right into it.
Yep. Next break, figure out the Patreon link.
Oh, yeah. I just got it keyed up right here. I can just drop it in. Yeah, I got it right here.
Ready? Yep. Hey, welcome back. Robert and Jason here, Mr. Texas Real Estate Radio Network. If you guys want to reach out to us in any way, shape, or form, talk about Mastermind, talk about investing, talk about all this other good stuff, 281-401-9008. Just text us, 281-401-9008.
Yeah, if you are in a deal, if you're a lender or borrower that is just going sideways, feel free to give us a call.
Yep.
And it would help if both parties are still communicating. Let's put it that way.
Mm-hmm.
So we can get everybody together and say, all right, guys, let's take a look at this thing. Rob can take a look at the rehab. We can sit down and run the numbers and say, all right, here's what we can do. Now, I will tell you this. You mentioned something at the end of the last segment, which I think is totally true. Go ahead and put it on the market.
Yep.
Because there are folks like us, there are funds and a whole bunch of other people that are buying things outside of the normal how do I put this? The normal kind of market pricing is a good way to put it.
Yes.
We've gone in and bought assets. Well, let me put it this way. We put them under contract, had no idea what they were worth. We just knew they would cash flow a whole lot.
Right.
Whether that's Airbnb or short-term rentals or a long-term rental situation, we have exit strategies at our disposal that most people don't have.
We are blessed with assets.
Yes, and we got a ton of assets, right? So a good example is we bought that fourplex in the Heights. We were going to do all long-term rentals, but now we're talking about Airbnb in the front 2 units. So it's even more profitable for us. So maybe we could have paid a little bit more.
Yep.
So the reality is if you've got a property or a group of properties or notes that are just not performing because of all this coronavirus stuff, because the market's changed a little bit, maybe refinance becomes an issue, rehab, whatever it is, give us a text at 281-401-9008, 281-401-9008, and just shoot us a text, and we'll get together with everybody, and we'll get it all sorted out.
So if you're just a flipper, right? Again, we're going to go way, way back to what we started 20 months ago. If you're the flipper, you don't have assets.
No, you probably don't.
Right?
Yeah, you got a bunch of other busted flips,
yeah,
right?
So that becomes the problem. Now, what you can do is just get it to a point where just put it on the market.
Yes.
Just put it out there. And that's probably what your investor will agree to. Let's just close this one out.
Let's just get it. Let's put it on the market. This is how I'd have that conversation. Look, you've got an idea for a number. I've got an idea for the number. But you know what? Neither one of our numbers make any sense because we ain't buying it, right? So let's just put it on the market and see what the market value of this thing is right now. If you've got a larger property, say on the west side of town, you could very likely have
no cabinets, but flooring's in, paint's done.
Buyer comes in, they pay cash because they want to rehab it anyway.
Yep.
You don't know what's out there right now.
Yeah.
And there's a lot of market activity and very little inventory.
Again, just understanding where we're coming from is if you're that real estate investor, you're in a really dark place right now.
Yeah.
It is not good. Sucks to get up. You're freaked out. There's tons of anxiety. You're not answering your phone. It's all that craziness because you don't have the assets, and the things you do and you thought were going to make you hundreds of thousands of dollars have now turned upside down. Mm-hmm. You've got to start addressing it. We'll happily have a conversation with you. 281-401-9008. Text us. We're a little snarky here once in a while, but we understand if you're in that pain right now. We certainly understand it. I more than anyone understand it because I did all the wrong things.
When you got dumped by like half a dozen partners.
Oh, my partners just took off for the hills. They were gone. Yeah. I'm like the only one answering the phone calls.
Yep.
That more than anything else is that's a huge partnership lesson that I learned. Right?
These guys all just disappeared.
They just disappeared. Where'd they go? I don't have any money.
Yeah.
So when this is all said and done and everything was paid off, I'm doing a capital call.
Oh, yeah.
And then we can go and have some fun with that. But we're down to one investor left and one principal investor. So we're a couple houses away from it. So I feel that will be. I'm so excited because 2 of those houses are on the market right now. One of them's under contract. If we get the green furniture out of the other one, I think that one will go on the market too. So we'll be good there. And then we're looking at our fund as well, and we identified 2 properties in the fund we should probably sell.
Yes.
Right? And so that will create more capital. We can go deploy, or we can have more capital reserves. So when you have these assets, you have a blessing. When you don't have the assets, you just have a really miserable existence.
Well, probably the best way to put it is it's not an asset until the project's complete.
Yes.
So until that project is completely rehabbed,
it's a liability.
Market ready, it's just a huge liability in your books. That includes any rental properties. Because here's the problem. If you're like, oh, Jason, I got this rental property and I have 20% equity in it. I'm like, you don't realize that equity until the property is complete.
Right.
Otherwise, it's just another distressed asset. And I can tell you, I've worked with real estate investors that have had hundreds of rental properties. In fact, one comes to mind that has had thousands at this point. And a significant portion of that portfolio is distressed.
Yep.
It's so bad. HOAs are chasing after these people, right? So those aren't assets.
No,
they're
liabilities.
Huge liabilities. Now, he can turn them into an asset once they're all sold and the cash is then put into the checking account.
But don't fool yourself.
Yeah, don't fool yourself. It's not an asset. It's not an asset until it is on the market.
Yep.
At least that's my definition.
I agree.
And as a rental property, it's not really an asset until it's got a tenant in there that is paying.
Yep.
And that's another thing. If y'all have a large portfolio out there, or you've got a handful of houses and the tenants aren't paying and you're ready to get rid of it, just give us a call, shoot us a text, 281-401-9008. We'll be happy to take a look at them and buy them, even with the terrible tenants in there that are not paying.
Yep.
We're willing to do that. We've got a fund that's able to sustain those payments until we can start doing evictions again. So just be aware that there are options out there, but hiding in the hole, avoiding phone calls, being snarky on Facebook is not going to. It's not. I'm not calling out anybody in particular, but I do know somebody that's got some projects sitting out there, but they got a lot of time to talk trash on Facebook. So, hiding from the lenders, hiding from borrowers and all that is just not going to work.
Right.
Let's put together a plan here with a solution.
Yeah, and I'll even take a little poke at some of the lenders who like to kind of not express the problems in the business, right?
Oh, yeah.
Like, everything is great. Everything is great. Yeah. Just come on out. Everything's great.
Yeah.
It's not great. It's not great at all. The terms of the loan have dramatically changed.
Mm-hmm.
It's completely new dynamic 6 months after the start of COVID.
Yes.
And too many folks out there still think, and they're still searching for 2019.
Yeah.
We have a lot of folks in our mastermind looking for 2019, and I'm like, it ain't 2019.
Yeah, that left, guys.
That's gone.
It left in March.
It's gone. And then the guys can do Facebook videos and all that other stuff trying to tell everyone it's still 2019, but it ain't.
That's not.
It's 2020.
Now, here's this weird environment where are there submarkets that have experienced some, let me put it this way. There are markets that are collapsing. Vegas is collapsing. Miami's collapsing.
Yep.
Parts of Chicago are going
San
under.
Francisco.
San Francisco, luxury real estate in New York is completely imploding, like 50% year over year. Those markets are imploding. But here you've got markets in Texas that are absolutely on fire. It's ridiculous how fast the properties are moving, how little inventory there is out there.
Mm-hmm.
But the loans are really hard to get. There was a story that I talked about, it was either Wednesday or Friday last week on our weekly market update, where loans have not been this difficult to close. It's like at a 6-year high.
It is really hard. Hey, guys, we're going to talk more about this tomorrow night, so thanks for joining us tonight. We'll be back for a short break, but thanks again. We appreciate it. This is Robert and Jason from Mr. Texas Real Estate. Come check us out. Thanks. That's a radio show. Did you see how I did a radio show ease there? Right
There you go. I like it.
Look at that. So I think we're going to go Monday, Tuesday, and then 1 hour on Wednesday and just build the 5 every week now. And then eventually, when our studio gets up, we're going to record at noon, so we'll be a day behind on sending you the stuff.
That'd be great.
Yep. And I think what we can do is we can do the hour live update, stop, and say if you're a Patreon account, Patreon holder, you know where to go. We're going to the. We can close out the radio show and move over to Patreon. I totally redid all our webinars and all that stuff again last night.
Oh,
no more Q&A free. It's going to Patreon.
Go to Patreon.
Gotta go to Patreon. $10. Come on, guys. $25.
Getting into lawyer country. Oh, I talked to you on the phone for 15 seconds. It was $15.
I bill by the quarter hour.
Exactly. All right. Let's do this.
I'll tell you about I told you that story about my partner.
Mm-hmm.
My old partner. Like, we would always, from time to time, get a lawyer calls because we were breaking contracts with waste management and stuff.
Oh, that's right. Yeah,
And so he would get on the phone. He knew that this was the corporate attorney for waste management. He'd get him on the phone at Friday at 1 p.m. because there's nothing to do.
Yeah.
And he would talk to him to 4. Nothing would get resolved, but that lawyer could bill 3 hours to waste management.
That's a good question. Let me look at that right now.
At like $700 an hour.
Here we go.
The following program was
What's that?
pre-recorded for
Let's talk about
broadcast at this
notifications
time.
on YouTube.
The following program is sponsored by Mr. Texas Real Estate.
What'd you say?
Welcome to the Texas Real Estate
You
Radio
can't get into
Network with
YouTube?
Mr. Texas Real Estate
What?
Jason
What's that
Bible
say?
and Mr.
It's
California
having problems
investor
with YouTube
Robert
notifications, so
Orfino.
I'll mention
Join
here.
us as Jason and Robert talk about the hottest real estate market in the country, the entire state of Texas. Learn why Texas is such a great market to invest in and why it could be strong for years to come. Get ready to talk all things Texas on your new home on the way to the office. Texas Real Estate Radio.
Welcome back. Jason
Evening.
Bob, Robert. Evening.
Mm-hmm.
Jason Bob, Robert Orfino. So somebody had mentioned some challenges on YouTube.
Oh, YouTube.
If you guys subscribe and hit the notifications,
Ring the bell.
ring the bell, right? Bing, bing.
Yep.
There is on your, I know on your phone, you still have to have allow notifications on the YouTube app.
Yes.
You may have to do something on your computer too. So, Dusty, you're not the only one that has that experience. I've noticed that as well. Now, I do believe there is a conspiracy theory out there that people are being unsubscribed and all that. Our channel's not big enough for that nonsense yet, but I'm sure it'll happen in the future. But, yeah, check on sometimes there's a phone setting and all that sort of stuff. So, in any case, hopefully you guys can get that all sorted out. So, last show we talked about loans and all that other stuff. This show, let's talk about appraisals.
Ugh. Killing me.
Appraisals. So there's a group of folks investors that they'll say things like, well, we'd like to keep lenders accountable. And we tell those lenders that if they can't close on a deal we're selling in X number of days, they're going to owe us X number of dollars per day. And I'm like, yeah, how's that working out for you when all the appraisals are taking at least 4 weeks?
Right.
Yeah, I'm not. Good luck with that strategy, right? I'm going to keep lenders accountable. I'm like, what? No, you're not.
I got the gold, Jason.
I got the gold. Yeah, I'm not going to work with anybody. If you play by my rules or we don't play at all. And I'm like, yeah, that's why your business is a fraction of the size it used to be. So the idea that you're going to push lenders around for appraisals when they have no control over the appraisers anyway.
Right.
So if y'all don't know, the second quarter this year was the largest refinance in history. What was it, like 1.2 trillion or something like that?
With the third quarter being even more.
Yeah, so Q3 is going to be even worse for appraisals. Mm-hmm. So who's getting all these appraisals done? It's all refinances. It's homeowners refinancing their house to get a lower rate.
Yep.
Why? Although, truth be told, I don't know why they need real appraisal, hardcore appraisers to go out there and appraise these things. I think a BPO would be plenty, which really is just a broker sitting in an office somewhere. It says, yeah, it's probably worth between this number and this number. If I remember my stats correctly, less than 30%, I want to say, no, I think it was even lower than that. It was 30% or 3% are cash outs. So why you need a full-blown appraisal for something that's a non-cash out, for something a homeowner's been paying on for a couple of years now, doesn't make any sense to me. But that's the Fannie Mae loan world right now. So the appraisal situation has gotten really bad.
Right. So here's what happened over the last since the last crash. So there was extreme scrutiny done to appraisers because of that 2008-2009 crash.
Correct.
Meaning these guys were just pumping up the numbers. Lenders could call the appraisers directly and get all the appraisals done, and that stopped.
Yes.
What came out of it was now there's appraisal brokers.
Mm-hmm.
So you go to a third party and you have no idea who the appraiser is going to be.
Correct.
Their job is to find the appraiser that's available, assign them, and then you just get a phone call. Hey, I'm the appraiser from Appraisal Nation, and I'm going in the doors tomorrow. What's the lockbox? Who's going to meet me there?
Yeah.
And you jump through all these hoops, get it done, and well, it worked. It was fine.
Yeah.
It was $450 to $600 appraisal. That was all good. With the refi market and first-time home buyers, because the rates are so low, what happens is, these Fannie loans are locked in for 60 days.
Mm-hmm.
So you apply for a loan and you are approved for the loan. You're now locked in for 60 days, right? Which means you've got to close before that 60 days, or the rate could go up, or in some cases, the rate could go down.
Yeah.
But either way, we're dealing with a finite amount of time to get it done.
Correct.
And so what happens now is in my understanding, is that these appraisal brokers are prioritizing Fannie, FHA, and Freddie Mac loans above our residential commercial loans.
Correct.
Now that pushes the market like Nueces County, Corpus, which already doesn't have enough appraisers.
Yes.
Right. The people are driving down from San Antonio to do appraisals in Corpus.
Yeah.
They're taking a 3-hour ride down there, but it's so busy, no one can do the 3 hours. You'll lose so much time.
Mm-hmm.
So what's happening now in these markets, because they're getting pushed for Fannie, is on our stuff, the refi. We're refining the stuff out. We're not, and some of the stuff we're buying, but we're buying that through hard money. It's taking 4 to 6 weeks for an appraisal.
Yes.
And 2 weeks ago, you didn't believe it. You were like, that can't be right, right? It can't. And I'm like, we're telling you, it's absolutely insane. And now here's a little game that's being played as well, which I do not like. Well, I can expedite this, Jason, for an extra $400.
Yeah, which makes the appraisal like $1,000.
$1,000 for the appraisal, and it's still taking 4 to 6 weeks.
Yeah, it's still, we expedite it, but it's still the same timeline, right?
Yeah. So I paid for one in end of July that I just got back. No, we didn't even get it back. It's with so here's the other thing that happens now. The appraisal brokerage appraises the appraisal.
Oh, yeah, that's right. Yeah, they check it.
They check the appraisal, and they might send it back and get some clarification on some things.
Mm-hmm.
So I'm in limbo in that world right now.
Mm.
So the appraisal came back, and the appraisal broker didn't want to send it over to the lender yet because they had some questions on it.
Mm-hmm.
And so it's kicking back and forth. Meanwhile, I've gotten extension after extension after extension. And my problem is the seller isn't asking for more earnest money. She keeps raising the price.
Mm.
You want an extension? It goes up $500 the price.
Mm.
So now I'm already $1,500 more than I was originally bought this thing for. I paid $1,000 for an appraisal. That hasn't happened yet.
Yeah.
And I've got to close by this Friday. Nightmare.
Yeah.
Nightmare scenario. Yelling and screaming all the time in my house about appraisers. So and this is the thing, again, through our mastermind, through other folks, like, Rob, I got a guy out of Dallas. He's going to close at 4%. Great.
Can he close?
Tell me in December how that went.
Yeah. Yeah.
Right? Because we're halfway through September. It's going to take 6 weeks. You're going to be into November. We're going to hit holidays. Let me know how that actually works.
Mm-hmm.
Now, and here's the other problem on this side, and I took up the whole segment here. On the other side of it, we have the real estate world. Okay?
Yeah.
And we have the 90-10 rule in our world for agents.
Mm-hmm.
90% of the agents do 10% of the work. 10% of the agents do 90% of the deals.
Yep.
So when you're dealing with one of the 90%, they're like, why can't we close in 30 days? What are you guys doing?
Yeah.
And we're like, do you have any other deals right now? Or are you not seeing this?
So I saw this big post on Lab Coat Agents, which is a big, like hundreds of thousands of folks are in that group on Facebook. And somebody posted up, hey, I've got a lender that says we might be able to close in 60 days. And everyone's like, find a new lender, find a new lender. I said, whoa. Where is it? And what's the appraisal situation? And then somebody will say like, well, here in Boston, Massachusetts, we don't have any problem. We can close in 30 days. Yeah, because there's 10,000 appraisers in Boston, right? That's not the case in rural Mass, right? Where it could take 60, 90 days to get it closed.
Hey, Robert and Jason here, Mr. Texas Real Estate, Texas Real Estate Radio Network. We'll be back.
Ready?
Yep.
Hey, welcome back, everyone. Robert and Jason here from Mr. Texas Real Estate. Hey, if you want to check us out, go to our website, mrtxre.com. MR is in Mr., TX is in Texas, RE is in real estate, mrtxre.com. We've got some updated pictures of our real estate center.
The real estate center.
We've tweaked it a little bit. We're about to have our swag store coming up.
Oh, can't wait.
Yes.
Can't wait.
You buy our T-shirts.
We need some temporary tattoos. I told some folks this weekend.
Oh, that'd be
We
badass.
need some Mr. Texas tattoos on it.
Nice.
So, yeah, I think that's something for the face, I think.
Mm-hmm.
Big tattoo right on the cheek. Or
I
on the
keep
neck.
looking at Mike Tyson thinking, you know what? In retrospect, that wasn't a bad decision. He looks badass.
Yeah, he does. He
He
does.
still looks good.
Yeah. Man, I saw some pictures of, he was talking, it was on Joe's show.
Yeah.
And
Came back and did Joe's.
I haven't watched it yet, but one of the quotes is he did some 30-second like crazy round, right? And he was like, I was in bed for like a week.
Yeah.
And you look at a guy like that at his age, and you're just like, and how lean he's getting. He's getting into competition shape now.
Right. $31 million.
Yeah, it's crazy. Just the amount of commitment it takes to get to that level. It's going to be. When is the fight? I don't
know.
Have they picked a date yet?
No, I don't think they have.
So if anybody knows the date of the Tyson fight, that'd be great to put on. Put it in the comments. I'd love to know. I got my phone here, but
That's going to make so much money. That's
going to make a ridiculous amount of money. You think we ought to go to? It's in Vegas, right?
No, we're not going to that. That would be great.
You don't think we?
Nope.
It's not going to be cheap, but to see it live, would be
I'd rather
awesome.
go to Poor Behavior.
Oh, okay. That's funny.
Speaking of, do we have our D&D night set up yet?
I don't know, Brian, if you're watching,
Brian,
we good to go Wednesday night. So I think we'll get started at like 7, if I'm not mistaken. Let me. I'll get some of the details worked out this week, but it'd be pretty sweet.
So we're talking about the refi world and what's going on. We're talking about reason why some investors can't get out of their private money loans, the other loans, hard money loan. And we're no different, right? So again, I talked about it last night. I'll say it again. We're no different. We've had to extend loans. But we communicate well with our lenders. We're suffering. Everything else is suffering. The loan to value changed the loan to cost. Now there's prepayments involved, which makes closing costs a lot more expensive. We're looking at this market, deciding what assets to keep, which ones to deploy, so that we can make sure that we have our reserves. Everything that everyone else is happening with, it's happening to us as well. So we have to go through this stuff over and over and over.
The fight's November 28th.
Oh, nice.
Ooh.
Right after Thanksgiving.
Yeah. Oh, we're going to be in Disney. Isn't that when we're going to be in Disney?
No, this will be the night before we leave.
You
I
want
think
to go
we're
to
there.
Vegas?
No, I don't want to go.
Come on, man. Well, Brian and I are going to be on.
You can go to Vegas. You'll be there in earlier that month. Don't say why.
Oh, I can't say why.
Don't say
Oh,
why.
I almost let that little cat out of the bag, didn't I?
Don't say why.
Ooh. Oh. I want it to be a surprise.
Yes.
Hey, what are you boys doing here in Vegas in the middle of COVID?
So
Nothing?
Again, we're watching that commercial loan world change. We've watched hard money change. It's absolutely different. And we're seeing the same issues that everyone else is seeing. We're seeing. We just had more reserve than most people, right? So and by design, right? By legal design.
By legal design. That's how we set it up.
In our business, right? We cannot go below a certain number, and if we do, we have to deploy assets.
Yeah, we've got to liquidate assets, to raise cash.
So
but we're also playing. I mean, obviously, I love tooting our own horn here, but we're playing big boy game now.
Right, we have our big boy pants on, and so we're seeing folks out there that might be struggling. And again, from my personal experience, I know how dark and how painful it is. And looking back in retrospect for Harvey, I should have went BK. Yeah. Immediately, the day after, I should have filed for Chapter 11 protection and just told everyone,
I don't know what's going to happen.
Deal's off, game's over, look what happened.
Yeah,
I got a house that's under 6 feet of water.
And let me explain this to everybody. They were insured for flood.
Yep.
This was not as a result. This wasn't damage.
No, we got $70,000 in flood insurance.
So this wasn't that they couldn't fix. It's the fact that the values eroded by 25% overnight.
429 was the ARV, and I just now have it under contract for $350.
Yeah, 3 years later. Right?
Yeah, my refi when I had a gain came in at like low threes,
which is crazy. You have
$100,000 out of the property.
So this is one of those things that, well, we need to talk about this on our private money notes.
Yep.
But we ought to start putting acts of God stuff in there because it's like, I'm not responsible for Corona.
Right.
I mean, think about if this had gone the opposite way and real estate, like it let's say it turned into a real pandemic.
Yep.
No, I don't want to say real one, but I mean the mortality rate was 7%.
Right. Hell, just the 2% that they originally projected, right?
Well, the IFR and the CFR are still hovering around 3%. I haven't looked at it in a while, but which means the incident and the case fatality rate, if you actually present at the hospital, there's a good chance you're going to 3%, 4% chance you're going to die. That's crazy. Imagine if that were 10.
Right.
And it's not as simple as treating with the Math Plus protocol or any of these other protocols that these guys have developed over the last couple of months. Imagine if it were that rate that we saw early on, or it mutated into something else, and we're looking at it. I don't think people understand law of large numbers.
Right.
There's so many people infected, so many people who've not been infected yet that once we start opening up the country, we're going to see that play out in real time. But just a few percentage points here or there turns this into, oh my gosh, there's a lot of people dying, to the death rate tripling.
Right.
You and I's prediction, which I think is still true, by the time this thing ends, and we predict this back in February, it'll be between 400 and 700,000 Americans that will have died from this thing over the 2-year period.
Yep.
And I believe that we're almost at 200,000 already. Mm-hmm. So I believe that number will come out to be true. Imagine if it were double that. Like, what people don't understand, Elon Musk had this great comparison. Somebody said, "Hey, Elon, are there aliens out there?" He's like, "Look, man, if there were aliens out there, Defense Department would have put that out. It would have been a boon for the industry."
Yep.
He said, "You don't understand. A 10% variance in how close we are or far away we are from the sun means there's no life on this planet."
Right.
Like, it's very, very rare.
Yes.
Like, what people don't understand, it's that little nuance, right? It's that little deviation.
Yes.
So when you have a storm blow in and your property decreases in value by 15 or 20%, as a flipper, you're done.
Right? Yeah, had that storm hit Beaumont like we thought it was 2 days before versus hitting Lake Charles, we would have had some major problems on our hands, right?
Yeah. Well, because the next storm after Harvey hit Beaumont. It was which one? I don't think it was Imelda. It was Imelda hit Surfside.
Yes.
Yeah, Imelda came in through Freeport.
Mm-hmm.
So, by the way, if everyone's like, oh, Jason, we don't want to buy all those assets. The eye wall landed on one of our houses, right? And it was just fine. Like it was like a Cat 2 or Cat 3, it blew through, no big deal. So it's these, you're doing these a percentage point at a time, right?
Sure.
So 10, 20, 15, 20% for a flipper is devastating.
Yep.
For a landlord, it's nothing.
Right.
We're like, we just keep renting it. It's flooded. We fix it. I've got, actually, one of our duplexes actually did flood during Harvey.
Mm-hmm.
We fixed it. We're back on the market. Guess what? Rents went up 10%. If they went down 10%, we'd still be making money. But the reality is that in the flipping world, that doesn't work, right? No. That doesn't work.
It hurts. Trust me, I know. Hey, this is Robert and Jason with Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. Thank you for joining us. We will be back.
That fight's going to be in California.
Oh, really?
In Carson.
Oh, it's on Vegas?
Dignity Health Sports Park in Carson, California.
Why would it be in Vegas?
Why would it be in Carson?
It's an exhibition.
Oh, that's right. Because those are all like, what do they call them? IAB sanctioned boxing matches in Vegas.
It was supposed to be 2 days ago.
Yeah.
But they do exhibition fights in Vegas. Right? Does anybody know why the Tyson fight's not in Vegas? Maybe they wanted too much money. I don't know.
That's what it says.
Have you been to Carson, California? It's horrible.
Oh, is it?
What the hell is he doing in Carson? My God.
Rumble in the jungle.
It's like saying we're going to have the fight in Pearland.
Yeah.
That's the equivalent to Carson.
Yeah.
Oh.
Major highway running through it, lots of malls, and just people.
Car dealer. Does it have car dealerships?
Car dealerships, tons of car dealerships, yeah. Yes, there are lots of car dealerships in Carson along the 405.
The 405.
Okay, this is 3. You ready?
Yeah.
You ready? I'm ready.
Welcome back. Just getting all spun up about percentages.
Yeah.
Yeah. So when you look at what Harvey did to this market, Memorial's a good example.
Yep.
Devastated that market.
Yep.
Absolutely devastated. I'm convinced that's why I was able to sneak in and buy that one at Spring Branch, even though Spring Branch doesn't seem to have any problems selling properties because they're not in the floodway.
Mm-hmm.
So, yeah, these now what's going to be wild is no more storms for the next 2 years, and those values will blow past what they were worth before Harvey.
Yeah.
In Houston, we've got about a 5-year memory on real estate. Like once the storm blows through and there's a little recovery, 5 years later, everyone forgets all about it.
Same thing in Jersey, same thing in New Orleans, right?
Yeah.
Putting everything back in 5 years, they're celebrating it like it didn't happen. Yep.
Yeah, absolutely. So it's just a temporary blip on the radar. However, if you're one of those flippers, you just get crushed.
Yeah, we got devastated.
Absolutely crushed. And then I guess that's when all the partners washed away.
The
Blew
flood
out
took
with
all
the storm. Yeah.
Hey, how we do? Really bad.
Yeah.
We're under 6 feet of water, and CNN's in a rowboat in front of our house.
I will never forget. I'm giving a seminar in Dallas, and I'm sitting upstairs, and I'm watching the news coverage, and I took a picture of the screen. I think I sent it to you and somebody else. I said, hey, I know you guys got a project down there. How close is it? He said, you see that roof behind the convenience store?
That's us.
That's us. And there was a big old John Deere tractor and a wave runner in the intersection doing donuts. Yeah. And I was like, I think it's got some water in it.
Yeah, it's got some water. Yep. Yeah.
It's got a little water in it.
So, and again, property, then we went over, more time to repair, more hard money fees. And then we lost more than $100,000 in appraised value. That went out the door. And, I'm writing check after check after check to keep the thing afloat.
Let's go through this process. You experience a loss. Could be fire, could be flood, could be snow, whatever. You finally get the insurance company to write a check.
Yep.
So you're floating the construction the entire time.
Yes.
They finally write you a check.
Yes.
But then you're rehabbing. It's another 3-4 month rehab.
Yes.
And then you put it back on the market.
And nobody's buying down there.
And nobody's buying anything because it's flooded.
Because all the houses around me are still gutted.
Right.
I'm literally about to go on the market, and there's still piles of debris. in front of people's houses.
I will never forget when we had bought one over on the west side of town. We rehabbed. We were one of the first ones on the market.
Right.
And you drive into the neighborhood, and it looks like downtown Mogadishu.
Still,
you're like,
this
is a $600,000 house, and there's still trash piled up.
Yep.
It was crazy, right? So how do you sell a house in an environment like that? You can't, right?
You don't. Yeah.
You don't. It sits. So if you're not going to rent it, even my rental was kind of wild. Once it flooded, we bought it, rehabbed it. It sat for a little while before it rented.
So let me tell you the other problem. So, okay, we got the insurance money. Let's get the crews back out there. Oh, wait.
There's no crews.
There's no crews.
That's right.
So now we're spending more time with lesser crews, charging me more money, and we're just limping along. It takes us 7 months to get it all done.
Do you remember how hard it was to get sheetrock?
Just couldn't get it, yeah.
You couldn't get sheetrock.
Yeah.
Appliances were a huge problem. I mean, you start having these regional supply shocks. Even if you had all the money, all the crews there, you couldn't even get the materials in time.
Yeah.
All the while you're trying to beat the clock, right?
You're trying to beat the clock, and you're just pumping more and more of your own cash into the project, taking a second out with your buddy, and all of a sudden you're like, oh, I'm in here for about $500,000.
Yeah.
With the insurance money and everything else, I got $500,000, and today I'm selling it for $350,000.
Yes.
There's a loss.
There's a big loss.
There's a loss there, and so you've got investors lined up. You've got to communicate that, and more importantly, the partner who was supposed to be the investor liaison was out the door.
Yeah. He's the first guy out.
He's gone. So he's long gone. I'm there. I'm like, all right, hey, here's what's going on. We're going to sit on these houses until the market comes back and sell them. And the way we're going to carry it is I'm going to keep putting my own money in.
Yeah.
And I've done that now for 2.5 years. So 3 years now, right?
Yeah.
So we're turning a corner. But, man, in retrospect, that next day, hey, all bets are off.
Yeah.
I'm out. Right? And I should have took that insurance money and just dispersed it amongst people, gave the note back, and said, I'm done.
I'm out. Yeah.
I'm out. I didn't. There were people involved. There were good friends involved. Like, we were with Jet Lending.
Yeah.
So I'm like, I can't screw those guys over.
Yeah.
I'm not going to do that. I'm going to put my own money in. I don't want to blow this relationship. I like them. They've been super helpful to me. So I'm making sure I'm paying my Jet note. I'm talking to my investors, letting them know it's not good, but I think we can come back. And then when I put it on the market and I realized that I'm nowhere close to the price I need.
Yeah.
Like, I'm willing to lose my money and someone else's money in the deal, but even there, I still can't do it.
Yeah.
So now 3 years later, we're on the market. We're under contract. We're going to sell that house. House is beautiful. Hasn't flooded since. Everything looks wonderful. It's a great place. We're under contract. We're going to sell it. It's going to be fantastic. And only now can I think about starting to pay some of these people back.
Right.
If this is you from COVID, file BK.
Yes.
File BK. Right? And as much as I love Eddie and Johnny, if you have a note with them, I'm telling you, the stress and the 60 pounds you're going to put on for 3 years of carrying this around with you is not worth it. Or call us up and we'll see if we can bail out. Because if it's a possible rental, we're having interest on it.
Well, we bought a foreclosure from Johnny and Eddie.
Yep.
And we, as they put it, I thought they were doing it just kind of sell us the deal, if you will. But they were right. They're like, you guys are the only ones that can turn this one around. We turned it into an Airbnb. It is crazy booked.
Yeah.
Like, we can't even get into. I think it's
for the next 2.5 months.
Yeah. So when we bought it, we've got a business model nobody else in town can replicate. So
we think the ARV is probably $355.
Yeah.
And we're all in at maybe $290.
Yeah.
I mean, that's including the furniture and everything.
Yeah, that includes all the Airbnb stuff.
Yep.
We spent probably $30,000 on furniture and beds and
big
all
house.
that. It's a big house. But we have a business model that most people couldn't pull that off.
Right.
So if you're in the middle of one of these deals and you're like, I don't know. Like, I keep looking at, should we be doing Airbnbs in Westbury? It's right there in the medical center.
Let's see what happens with these two in the Heights.
Okay. So
I'm not sold quite yet on Inner Loop
Airbnbs yet. Interesting. So if you guys have got some of those deals that are going south, 281-401-9008. 281-401-9008. So the other question should be, well, you guys were impacted by COVID. So why didn't you take your own advice and file for BK? And I'll answer that with, we have a completely different business model now.
Right.
Like, we don't have a flipping business model.
Yeah, we don't have that. That was bad.
We just buy and put renters in.
Yep.
So they're cash flowing. Well, what happens if, the market changes like it has now and you have the possibility of renters not making payments? Simple. We're going to Section 8.
Yeah. Over to Section 8.
The most we have to carry is 6-8 months of no payments. But we've got we just don't have one house. We have, by the end of next month, we have 271 doors.
Right.
So it's like we don't have to carry. It's not like a flipper who's got 5 houses and now they have 5 houses with no income that just got flooded and they're worth less than they are today.
And we have assets. Like, we look at two of our assets. It's like, hey, should we sell these? That'll put about $250,000 back in our coffers.
Mm-hmm.
Do we need it? How can we deploy it best? Are we going to need it to close this other loan over here? So we have the luxury of options.
Yes.
And when you're flipping and it goes bad, there are very few options.
Yes.
Hey, Robert and Jason here, Mr. Texas Real Estate. Give us a shout at 281-401-9008. We'll be back.
That was 3?
That's 3.
Yeah. I want to talk about options.
Yep.
It's alright. There comes a time. Got no patience. Search for peace of mind.
Ready?
Yep.
Yeah. Welcome back. Jason Bott, Robert Orfino. One of the reasons that we play in the markets we play in, and for those of you who are new, let me explain to you what our business model is. We really like the affordable house model.
Mm-hmm.
We like that entry-level rent model.
C plus B.
Yeah, a C plus neighborhood, C plus neighborhood, and we rehab them to a B plus standard.
Yep.
You walk into our low-end rental properties, and they're probably nicer than the house you live in. Like, that shocks people when they walk in and go, whoa, I wish I had these countertops in my $600,000 house in the Heights. And I'm like, I can give you our countertop guy. We can have him. You'd be amazed how little we pay for this stuff, right? So the idea is that we're the affordable house model. Our Airbnbs are the same way. We want it's the affordable family vacation.
Yep.
So the reason we do that is we have so many more potential customers than if we were to do the $400,000, $500,000, $600,000 house.
Sure.
I'm seeing folks getting eviscerated the last couple of years on $600,000, $700,000 houses.
Yeah.
Yeah, you can brag on Facebook about how pretty they are, but I like my balance sheet to look pretty. I don't really care if I can brag on Facebook. I like the balance sheet, the income statement to look really sexy. That's the only thing that needs to look sexy to me. Right?
I'll show you some sexy stuff in Cashmere Gardens.
Yeah, that's right. I'll show you something that'll blow you away in Cashmere Gardens, right? So that is what makes most sense to us. Now, why do we do that? Because it allows us massive options.
Yes.
And if there's anything that will instill a massive amount of confidence in your real estate business, it's options.
Mm-hmm.
I could sell the notes. I could buy the houses. There's a million things you can do. Those options become less likely the higher you get up in price point. Now, I say this, and there are about 100 gurus that are disagreeing with me on Facebook right now. And I will tell you, why don't you guys send me your balance sheet and income statement, what you've done during COVID, and we can have a little debate. Because my guess is you didn't pick up as much equity as we did. So the reality is that, it's going to be great. When we do the whole tax return thing, By the way, Rob and I are producing our tax returns in 2021 to show you guys what we did in 2020. So when someone comes out and says, well, no, you should do X, Y, and Z, we'll say, you need to send your returns to our CPA, and they will review yours. Third party. They will review yours and review ours, and we'll see whose is.
And again, as cocky and as arrogant and snarky as that sounds, if someone is doing better than we are,
I want to know.
We want to know.
Yeah, I want to.
Whoa, what are we missing?
I am totally for it.
I'll join your program right now.
I'll write you that $20,000 check for your real estate guru program today.
Absolutely. Tell me what I'm doing wrong.
Because I'll tell you what, if we could double the number we've done already this year, 20 G's is nothing.
Yep, absolutely nothing.
I'll write it right now. But the reality is that the guys that are teaching from stage, the vast majority of them, don't really do real estate.
Nope.
So they'll get up there and teach you about options. Well, if the house doesn't sell, you can just you could just rent it.
Finance, lease option.
Or you can owner finance or lease option. I'm like, really? All those flippers, all those funds, a better way to put it, all of the funds that are filing BK right now because of Hurricane Harvey losses, you're telling me they're not smart enough to do lease options, Airbnb, all that? Oh, or is it the fact that the regional market is so depressed they can't get them refied? Or, and these guys are backed by really big banks, they're not allowing them to do these things. So a lot of this stuff that you get told from stage about options, well, you buy this and you're going to have all these, in fact, this is the way they actually couch it, Rob. If my flipping program I'm selling you doesn't work, you can always rent it. That's really the story that's going on. If you don't believe me that my program works, that's okay, because then I can sell you the rental program.
All right.
And it's like, well, wait a second. Well, how many times have you done that? How big's your portfolio of failed flips to rentals? Our little joke is Rob got into Airbnb because we had a flip that didn't sell in Jersey, right?
Yep.
That thing's making so much money, it's ridiculous.
Actually, I put it on the market for close to $800,000.
Yeah, and you're going to make it absolute killing of it. Yeah. So there is sometimes that does work. If you get backed into a corner, then you can go do some of these things. But it's not a business model.
Right. No. It's a business model for him.
It's a business model for him because he can sell you a $20,000 coaching package.
Yeah, absolutely.
But the options is what's important. And the lower you go into that marketplace, to a certain extent, you don't want to go into like the really rough areas of town because although I do know a guy that does this, but you're really not going to turn those into Airbnbs and short-term rentals and all. You're not doing that with the $60,000 houses. And there are markets in Texas that do have those $60,000 houses. But if you're in a decent little neighborhood with a good HOA and people don't park on the grass, you've got a lot of options. That's true, man. You can tell the quality of a neighborhood by where the cars are parked.
Got it, yes.
If they're parked in the grass, that's the wrong neighborhood. You should not buy houses in the...
Don't live there.
Don't live there. Upper tier neighborhood, they park in the streets.
Yes, in the driveway, in their garage.
Oh, well, see, here we go. That's the layers, right? They park in the street, then they park in the driveway, and they park in the garage. If you drive down a neighborhood in the evening and there are no cars and they're all parked in the garage, it's a really nice neighborhood.
Yeah, I live in a neighborhood where we all park in our driveways.
Yes.
There's not too much on the street.
I am definitely a driveway neighborhood.
You're a driveway neighborhood. Yep.
And one of the reasons I don't like the Heights is there's so many houses that don't have garages, and everyone parks in the street, and the streets are as wide as a postage stamp. Not designed for full-size trucks. So anyway, if you go down those neighborhoods, you'll see it, right? They'll have wide streets and all that. Anyway, so long story short is, if you get into those affordable house marketplaces, you've got so many more options. If you guys were flipping $250,000, maybe $300,000 houses instead of $400,000, $500,000, $600,000, I think it would have gone much differently.
Yes. Yeah, if we were in that 250 world, perfect. Yeah.
Maybe lost a little bit of money.
Yeah, but not much. Yeah, much. We probably still would have gotten a $70,000 insurance check.
Oh, you would have gotten the same check.
Yeah, almost the same check, right?
But I think the difference is the closer you are to that median home price,
yes, absolutely,
as a flipper, protects you a lot.
Yeah, absolutely. Yeah, absolutely. And we talk about that all the time. If we're going to be flipping, we're going to be flipping in that 250 to 350 range.
Yeah, 400's pushing a little bit.
Pushing a little bit, right? So we've got one coming up. We're going to do an add-on. Our sell point's 329.
And I think it'll sell in about 6.5 minutes.
It's absolutely first-time home buyer perfect.
Yeah, we had one of our broker friends that told us that one of his agents put a house on the west side on the market, and he said, "Boys, how many showings do you think we got?" I think I said 30. You said 20. He said 100.
Yeah.
In like a couple of days.
Yep.
And then it's sold. I think they got 20. What did he say? 25 offers.
Yep.
Half were for cash.
Yep.
And that's a house right around the median home price.
Yeah. Again, and for full disclosure, the flip that we're doing is again to make money to pay off the debt from.
Oh yeah.
Those guys take it off. My partner's taking off on
Yeah.
me. So, but it's all better because now I have options, right? I've got teams. I've got the ability to buy. I've got the ability to get loans. I've got the ability to sell the assets now, which we're starting to do.
Yep.
Which is a lot better. So again, it took me 3 years and $27 million worth of real estate acquisitions to get out of my dilemma. If you don't think you're going to have those options, you might want to look at BK.
Yeah. Or just give us a call and we can take a look at your portfolio.
Yeah, I think we're probably could be a good last resort for a lot of folks.
Yeah, it's there's again, we started these last two shows when we were presented with some information from one of our private lenders that a significant portion of the portfolio was non-performing, and again, I mean, I guess it shouldn't shock me here in the day of COVID. If you're one of those folks, give us a call, shoot us a text, and we'd love to take a look at the portfolio and see if we can get you guys out of that jam.
Excellent. Thanks, guys. A little bit back here after a short break, and then we'll see you tomorrow night. All right, Rick.
Thanks for watching, guys. We're back in COVID Central here. So we will see y'all later. COVID Studio, COVID 1.